Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 top analyst tech stocks, all under $15 a share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks in the tech sector, all priced under $15 per share and with recent ratings from 5-star analysts. On top of that, they actually come in with unanimous buys from Wall Street and price targets that would imply some pretty big upside potential. We found today's stocks under the Tip Ranks Top Analyst Stock page. Found right underneath the Ideas menu, under Top Analyst Stocks, we'll find companies that have recently picked up ratings from top-ranked analysts. We narrowed in on the tech sector with a strong buy consensus, and then I sorted by price down below. So today, we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Of course, with some of these lower price stocks, there is a lot of upside potential, but that can also come with volatility. So please always keep your own risk tolerance and investment objectives in mind. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these 3 strong buy tech stocks. First up, we're taking a look at BlackSky Technology. They trade under the ticker BKSY, currently priced at $11.50. They really burst onto the scene last summer. Year to date, the stock has gained nearly 7%, and in the last 3 months is down slightly at 11%. BlackSky is a space-based intelligence company providing real-time, high-frequency satellite imagery and analytics. They operate a proprietary low Earth orbit, or LEO, satellite constellation optimized for cost-efficient, high-cadence monitoring of critical global locations, economic assets, and events. The company serves government and commercial clients with AI-enabled analytics for applications like intelligence, surveillance, and reconnaissance. In their latest quarterly report, BlackSky came out with an earnings beat, a 22% year-over-year increase to their revenue, and a 50% increase in their backlog. Their loss per share of 42 cents was 12 cents better than analysts anticipated, and they increased their liquidity position by 51% from the prior year, with a total liquidity position of over $136 million. Taking a look at their revenue by segment, we can see that while their imagery and software segment shows a bit of a plateau in recent quarters, their professional and engineering segments surged significantly, driven by new contracts and professional services, including a major contract in India and strong demand for AI-enhanced satellite imagery. A couple of weeks ago, we did hear from a 5-star analyst at Benchmark who increased their price target. They cited the company's significant contract win rate in the first quarter and successful Gen 3 satellite deployment. BlackSky backlog grew 50% year-over-year, demonstrating the increasing interest in their geospatial offering. They believe this trend will continue to accelerate, driving BlackSky's conversion. And with 6 current analyst ratings, the stock does come in as a unanimous strong buy. The average price target of $18.33 implies an upside potential of nearly 60%. Looking at those ratings down below, we can see a couple 5-star analysts weighing in and price targets ranging from an upside of 4.5% all the way up to 126%. For our second tech stock today, we're taking a look at BackBlaze. They trade under the ticker BLZE, currently priced at $5.91. They have seen some ups and downs this past year and overall are down about 6%, having hit some lows here in April. In the last 3 months, they are down 8% but have been climbing back a bit recently. BackBlaze provides cloud storage and backup solutions for both businesses and individuals. They offer simple, cost-effective data storage, backup, and recovery services with a focus on ease of use and affordability. They serve a wide range of customers from small businesses to enterprises, competing with larger cloud providers like AWS and Google Cloud by emphasizing transparency and low-cost pricing. They shared their first quarter earnings report near the start of May, coming out with both an earnings and revenue beat and improved profitability. Their Q1 loss per share of 3 cents beat expectations by 3 cents per share, while revenue climbed 15% to $34.6 million. The company also saw their adjusted EBITDA margin triple and their AI customer base grow by 66%. And following that quarterly report, we did hear from a 4-star analyst at William Blair who reiterated their buy rating. They noted, BackBlaze's guidance for the second quarter and full year reflects a careful yet optimistic outlook, and that they anticipate continued growth in their B2 cloud segment and aim to achieve positive free cash flow by the fourth quarter. Despite some challenges, management's confidence is bolstered by a substantial increase in direct sales bookings. The BackBlaze stock does just have 4 current analysts weighing in, but they do all rate the stock a buy. And their average price target of $9.50 implies an upside potential of over 60%. Looking at those price targets down below, they range from an upside of 35% to 86%. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're taking a look at Cantaloupe. They trade under the ticker CTLP, currently priced at $8.54. They are in the green overall this past year, gaining over 26%, hitting highs back in February, though they are in the red over the last 3 months, down over 6%. Cantaloupe is a digital payment and software services company, providing technology solutions for the unattended retail market. They provide cloud-based technology solutions for self-service commerce, focusing on cashless payment systems, microtransactions, and IoT services. Their platform supports vending machines, kiosks, and point-of-sale systems, enabling seamless digital payments and operational analytics for businesses in retail, hospitality, and others. They did share some mixed results for their latest quarterly report near the start of May, noting some weather impacts and economic concerns. They did say there was a pullback in large equipment purchases due to economic uncertainty, though this did rebound in April. And the company did see their revenue increase 11% year over year to over $75 million. And adjusted EBITDA grew 37% to $13.9 million. It was also one of their best quarters for cash generation. Now, back in February, it was reported that Cantaloupe was exploring options such as a potential sale or go private transaction. And just today, it was reported to Street Insider that there have been multiple bids. It was reported that the final round of takeover bids for Cantaloupe are in, and that multiple parties participated in the process, and that the payment company has received bids of over $10 per share. So that is still all up in the air. And currently the Cantaloupe stock has 4 analyst ratings, all giving it a buy. Their current price target is $13 per share, which would imply an upside potential of over 53%. Looking at those price targets down below, they range from an upside of 41% at $12 to 65% at $14. So that is a quick look at 3 tech stocks, all priced under $15 per share, with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies in the comments down below, and which one grabs your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.